If you think the stock and crypto markets are going to continue selling off and we're headed into a recession, you are dead wrong. What's happening right now is nearly identical to what smart investors saw in December of 2018, just before the biggest bull run of the last decade. And this time, the opportunity is even bigger. Now, real quick, I'm Brian Decker. I'm the co-founder of an AI company with 20 years of experience in macroeconomics and financial markets. I've lived through 4 crypto cycles, studied every Fed pivot since 2008, and have helped thousands of investors build serious wealth by catching it before the headlines catch up. Now, in this video, I'm going to show you guys why the panic you're seeing in the stock markets right now is a generational setup for wealth, just like in 2018, and how the coming Fed pivot this quarter could launch the biggest wealth cycle of our lifetime, driven by AI, Bitcoin, quantum, robotics, and nuclear. Now, right now, we're entering in a once-in-50-year wealth window, and it's been driven by those futuristic sectors I was just talking about. And you have just 4 years to position yourself before the crowd catches up. But I'm sure most of you right now feel that fear in the market, and it just doesn't feel like it's a good time to invest. Because right now, in April of 2025, many people feel like we have a softening market. There's all these recession fears. We're getting slammed by tariffs. We've seen crypto down by 30% to 50%. The stock market has plummeted. But what most people have forgotten was in late 2018, the markets were in this exact full-blown panic mode. And yet 2019 was one of the best years ever for stocks. So I want to take you guys back to 2018 so you guys can see the similarities that I see, and that'll kind of give you the confidence to be buying while there's blood in the streets. Now, first thing I want to do is to look at this chart. Now, this is a chart of the S&P 500. And now what you would notice is going back here is October of 2018. And it was in October of 2018 that Trump came out and labeled himself as the tariff man. He spooked the markets and really put on this full-scale trade war that erupted with China. Tariffs had hit billions of dollars of goods, Beijing was firing back, supply chains were frozen, global trade. We also had the Fed stating that they were going to continue to push interest rates up, and every headline we were seeing in the news screamed of recession. So if you look at the S&P 500 right here in October, it plummeted down by 20% during this 3-month period of time. But these 20% loss that we saw in the S&P 500, that was just peanuts compared to Meta losing 40%, Apple losing like 30%, Bitcoin crashed all the way down to $3,000. But as you see on here on the chart, everything flipped. And what caused this flip was Jerome Powell came out in early January and said, hey, I'm going to calm things down right now. We are going to be able to be signaling to the markets that we're going to start easing the liquidity. And guess what happened? Look at this. Over the next, from basically beginning of 2019 up until the summertime, the stock market completely spiked and then continued on this huge run in the S&P 500, all the way up from the bottom lows at about 235 all the way up to 345. Just in 2019 alone, we saw a 30% move in the S&P 500. Now, it didn't just stop there. Let's look at some of the other charts so you guys can clearly see this pattern play out. Next, we're looking at a chart of the QQQ, which is the NASDAQ. And here, once again, you see, here is that October mark, and here, look how tiny it looks on here. But we saw the NASDAQ plummet all the way from about $200 all the way down to about 160 per share for QQQ. And then what happened? Fed pivot, and we just see this exponential rise leading for 2 years. Now, I know what you guys are looking at right here. Now, remember, that was the brief 3-week period of time that we saw COVID. Now, let's go ahead and look at some of the individual stock charts. Now, here's a chart of NVIDIA. Many of you guys have made a lot of money on this chart, but you probably forgot that NVIDIA in October was at around $7 a share, and it dropped all the way down to around $3.50 a share, only to skyrocket all the way up to $14 a share once the Fed made that pivot and liquidity funneled into the market, and everyone was panicking during this period. Now, let's go look at Bitcoin's chart. Now on Bitcoin's chart, you can see here, same thing happened. We saw in October, Bitcoin's price plummeted down. Now this was even during a bear market, but this just shows you what could happen when the Fed pivots and liquidity comes in. And this was during a bear market of Bitcoin here. We saw Bitcoin's price drop from about $7,000 all the way down to about $3,000 per coin, only to go ahead and hit up to as high as $14,000 about 7 months after the Fed pivoted. People, even in the bear market, made 300% gains on Bitcoin. And lastly, I want to go look at Meta. So in the Meta chart, what we're going to see right here is here's Meta, known as Facebook. Once again, we saw right here, it got all the way up to about $220. We see all this massive sell-off. And then once the Fed pivoted, we saw it drop from 220 all the way to 120. Sounds familiar? It's exactly what we're seeing in the Meta charts right now. And then what happened? Fed pivoted, and guess what? Went all the way up to almost $400 a share over the next 2 years. All because people that bought down here when there was so much noise about a panic of recession and all these tariffs, and the Fed pivoted, and then Trump went from trade wars to trade negotiation talks, the markets ripped. And the people that were smart and dollar cost average and bought here ended up making life-changing gains. Now, because this was 7 years ago, people forget how much the panic was infiltrating the market. The panic, though, it wasn't to be participated in, it was just a setup. And guess what? That Fed pivot was the launch pad to unbelievable gains. Now we're in 2025 and the setup is the exact same. We've seen the market completely panic, not because there's been actually any inflation creep into the market from these tariffs, but guess what? Markets hate uncertainty. And because of this, Trump is sitting there saying, oh, tariffs are going to be on 25% of autos. Or then tariffs are going to be against China. Oh, tariffs are going to be against everybody. And because of that, the markets and all the big investors sold off as soon as these tariff fears first entered the market in the beginning of January. And we saw that liquidity get sucked out in December. So they sold out. We all saw Warren Buffett liquidated tons of his positions in December and January. And now they're starting to re-enter the market. The reason why they're doing this is they know that the market is oversold, that there's no material changes. Unless Trump comes out and gives the market something they already haven't heard as their worst case scenario, the markets are going to be rebounding. And this time when they rebound, the opportunity is 10 times bigger. Because guess what? The stock market has not been able to correctly price companies in these futuristic sectors like AI and robotics because their profit margins are so much higher than anything the world has ever known. And now today, sure, we have the Trump tariffs, they're back on, the market's in that full panic mode. And guess what? Powell, at his last meeting, which earlier happened in March, what did we see? He started to have some dovish tones. And the second that Powell begins to pivot, which should be, my guess, in May or June, we are going to see the markets rip because now they're having the certainty of what's going to come. And this is being fueled by what is known as liquidity in the markets, because the lifeblood of everything in a market is actual cash flowing through the system. So I want to show you guys a really cool chart. Besides, forget about anything and the jobs numbers, forget about anything in the earnings report. Guess what? It's just like you at home. How much more willing are you to spend when you have more money coming into your checking account every single month than the money is leaving? Your liquidity is increasing, therefore you're buying more things. That is why liquidity is the lifeblood of everything. But with liquidity, cash coming into the system, it takes a couple of months to move into the system. So I'm going to show you a chart. It's the most important chart I'm going to show you today, and it's about what's known as the global M2 money supply. It's the amount of cash that all the major countries around the world are putting into the system, and that money flows into the hands of investors, which can be used, and the more liquidity, the more risk on assets they purchase. The lower the liquidity, the less risk on assets that they purchase. So let's go ahead and look at that chart. Now on this chart, you're seeing two things. The orange line is Bitcoin's price. Now Bitcoin is one of the most popular risk on assets. And the yellow line is the money supply, the amount of money moving into the system. And what this does is it takes on average about 100 to 120 days for the money when it goes into the system to roll into asset prices. And what we saw is what I've done is I've taken this on 108 days, which is a chart from a really well-known investor named Raoul Pal. And what he does is takes the price of Bitcoin and he compares it and overlays the money supply. So it's a really good. I mean, look at this. Bitcoin's price goes up, money supply goes up. Money supply goes down, Bitcoin's price goes down. Money supply goes up a little bit, Bitcoin's price goes up a little bit. And guess what? We are right here. So what we can see is look what is coming ahead of us. Over the last 3 months, we have seen this yellow line, the money supply, absolutely skyrocket. Now look what happens to Bitcoin's price every time this happens. It happens here, there's this. What happened to Bitcoin's price? Skyrockets. What happens when it falls? It falls. We are now seeing, we are right here. We are within, this is kind of the doomsday of somewhere between the end of April and the beginning of May. The money supply will have worked its way into the system to send these assets skyrocketing. So what type of assets are we talking about? We're talking about Bitcoin, crypto. We're talking about AI stocks, robotic stocks, these riskier asset stocks. And we've seen this money supply skyrocket so much that it's going to make its way in there. So if you look at it and you think about it this way, we know that in 2018, tariffs scared the market, there was panic, and then we finally saw that pivot. Guess what happened? They took off. Well, what are we showing you already in the charts? We see that in addition to the Fed likely pivoting in May or June, we also have this massive supply of liquidity coming into the market. So we have certainty coming in when we get clarity around the tariffs. We also have a Fed pivot coming within the next couple of months, as the Fed has already said that they're going to be likely bringing interest rates down and injecting more capital into the markets. And number three, we have a massive amount of liquidity that has already been skyrocketing for the last 3 months, and it's working its way into the system. Now, if you guys need any further proof, what you guys want to look at is what is BlackRock and a lot of these other large funds doing? Because remember, I told you, Warren Buffett and many of them exited the markets in January and December when those tariff concerns and headlines started hitting and that liquidity started drying up. And now, over the last week, we've seen 8 consecutive days of inflows into Bitcoin by BlackRock, and these major funds are starting to rebuild their positions because they know what's going to be happening next. Now that you can see the markets are trying to fool you, giving you fear to not buy the assets, while behind your back, BlackRock and the other large funds who exited the market in December when these first tariff headlines and this liquidity started to dry up, they are now buying and re-entering into their positions. We've seen 8 consecutive days of positive inflows into the Bitcoin ETF, and we're starting to see people buying NVIDIA stock, a lot of these things off the bottom. But what we also know is what they're buying now is very different from what they bought in 2018. Why? Because technology in our world is changing. Because by 2029, AI, it's going to have an IQ of 1,000 and be able to build billion-dollar companies in just days. Robots, well, guess what? Amazon already has 750,000 of them because they're replacing humans to improve their logistics and improve their profitability. And Bitcoin, we've already seen many companies establish strategic reserves. We've seen it become an actual global asset, and I believe it's going to rival gold and be the base layer of this new global economy. And quantum computing. This will be able to rewrite everything we know about energy, finance, and science and crack codes that would have taken a normal computer 1,000 years to do. And the power source behind all this will be nuclear energy, because it's going to be the cornerstone of being able to provide enough power to these AI data centers for just pennies. Now, this isn't a prediction. This is already in motion. We've seen this by Cathie Wood and ARK Investments. We've all seen this by BlackRock. And guess what? Your old playbook, it's dead. They've put into play this new playbook. Your old playbook, what did it consist of? 401ks, index funds, some rental properties that take you forever to cash flow. Well, guess what? That is not the playbook here. And we know the Fed is about to pivot, flooding the system with cash again, just like what they did in 2019. And this time, it's lining up to be a more powerful tech cycle than we've ever seen before. And now this is why I've actually taken the time, because this is so urgent, to make you guys a video to watch. And inside of this free video, I'm going to show you guys why Trump's return is igniting the biggest tech expansion ever. I'll give you a simple 3-step strategy on how you can grow just $10,000 into $300,000 within the next 4 to 5 years, and why delaying could cost you millions of dollars. The specific sectors that I'm investing in, I'm going to tell you those too. I'm going to show you guys what sectors I'm investing in. And the best part is, you guys don't need a finance degree or some massive bankroll. You guys just need a blueprint and the courage to act before the crowd wakes up. Because the gains, you got to get in early. You got to be an early adopter. And those are going to be made between right now and 2029. And after that, the easy money is gone. It's like buying Bitcoin at $3,000 versus $85,000. The people that got in early made the money. And now you guys have the evidence from the charts I just showed you to remove any of that fear that we're going to go into some recession or that these tariffs are going to cause the world to collapse. You guys don't have any excuses anymore. And I hope that this video might be the wake-up call you didn't know you needed.